Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So we do have some mixed markets around the world as Europe gets a decent bounce. Asia is mixed with the Nikkei stabilizing. Our markets got a mini reversal yesterday heading into the all-important Jobs Friday. So Scott, how do you think we stand?
Well, I think we're like on a feeble little platform. Yesterday, the market looked like it was going to basically crack when Demark came out and said that if we don't hold, in the next day or two or hold 1740, we could see 40% lower. I think statements like that are irresponsible. I think statements like that are just trying to provoke headlines. Bottom line is, we've had three different trends that we've been watching. First one at S&P 1830 was broken. Second one, 1770. Broken. Earlier this week we had 1740 that we briefly went below yesterday, came back above, giving us a tactical red dog reversal for cash flow. Now the question is, with the futures up a little bit, can we retest 1770? And if we try and get there and it rejects it, what chances are if we do take out 1740, we could see the 200-day down at 1707. So I still think that this tape is just a little wishy-washy and you have to take trades and not go in either way.
All right, so what if you show us a visual then of the levels that we're watching?
Okay, well, I'm going to show a visual of a chart from free charts or stockcharts.com because our normal charting software is down. So, bear with us with these visuals. This was that trend that broke earlier this year. Here's where we're holding in support. This low here is 1740. We'll see if we can get any kind of bounce, and then tomorrow we'll see what kind of jobs number we have.
Well, we often look to the banks for clues about market direction. What do you see there?
What I see there, I see lots of banks have come in, really quickly just off the cuff. Goldman and Citigroup's been really weak. Bank of America has been, holding in better. So if you're looking to buy a bank, it seems like Bank of America versus perhaps, the low 16s is a spot that you might want to nibble if you think it's heading higher this year, which I do think it will.
Well, and we know that high beta tech has been pretty mixed. Apple showed some nice relative strength yesterday after putting some upside follow through. What are you thinking about Apple?
I think that Apple is trying to hold in there after earnings. It's showed some. It's almost been like one of those. It's been like a defensive play. We saw this a few times last year, where in weak tapes, money hid in Apple. So maybe in the low 500s where it's been okay. I would think that traders that are trying to be long it, they want to be long. Maybe verse 505, and then if we do get a trade into the gap of 515, if you look here real quickly on the longer picture of Apple, you will see that here's where we are. If we get above 515-ish, maybe you see a retest of this broken trend line from earnings, or somewhere close to that around 525.
And you always like to look for relative strength, and Netflix showed some as well, holding above the 8-day.
Yes, well, you look at the chart of Netflix here. Netflix is just, in its own little stratosphere, all the way up here. I'd say as long as Netflix stays above 400, perhaps that's somewhere for relative strength. But look at the size of this move. Wow. Anyway, with that being said, it's one of the chosen ones. See if we can stay above 400, but right around there.
And social media is on the move after Twitter's disappointing earnings. What level does Twitter need to hold before we get into some of the other names?
Well, Twitter, anytime a public company has its first report, you always have to be a little skeptic. I'm always skeptic into earnings anyway. That's why I take options, because risk is premium paid. And Twitter, that went from 40 to 70, that was at 65. Why not take options? Because anything could happen. Well, what happened is the amount of users disappointed in the street. So you look here at Twitter and you'll see the chart. Okay, this one you actually see a little bit clearer. This was the high there. This is where it was before earnings. I think I would say 50, if we see it this morning, might be a spot to see if some support comes in. If it were to break that area, 46, I think, is a big one. 46, to me, would be a spot that if you want to put some long-term money into Twitter, this would be it. But we'll see where the first 30-minute low is to see if there's a trade there.
But meanwhile, you're getting individual stock action because within the group, Yelp had a strong report and is up about 10%.
Yes, so it's good to see that there are divergences and individual companies are rewarded based on their own reports. And if you take a look at Yelp real quick, you'll see that it's up pre-market. I'm not sure if it's going to hold. This is the high. If it were to get above that, you'd see momentum. I wouldn't chase Yelp. And Facebook's down a little bit, so Facebook is going to be interesting. Facebook, you have the gap from earnings. Okay, it's had an enormous move. I'd say as long as it holds above this gap, which is somewhere around 60, you could stay with it. But if it starts to come into this gap and the weakness from Twitter spreads because it's down 20% and they think it's an overall industry thing, which I don't think it is, I would get out of your swing trade, and use that, pivot low there as your area to trade against. And
of course, we have LinkedIn after the close. What do you tell those who may be looking to trade it after hours?
If LinkedIn has had a really big move. It's been like quiet lately while everyone else has been centering the action around Facebook, around Twitter, even around Yelp. So this has been quietly consolidating. And if you look here at the chart of LinkedIn, you'll see, if you remember, this is when it broke above this 100 or so, 110, gave you a really nice move to 250. Since then, it's just been consolidating. This is one big consolidation. So with that being said, it is poised for something. A lot of people, I guess, have stopped playing it, so maybe it'll be good considering that everyone was playing Twitter and it was bad. But anyway, if you're going to trade this after hours, if you see a report, to me, first spot would be if it gets above 220 and holds it, maybe you buy it for further upside. If it gets above 230, I think shorts get a little bit worried, and that's how it played. If it's a soft report, you do have recent support around 190. So at this point, it's tight and set up for something. I don't know what that is. I think LinkedIn still has a big future, but I liked it a lot better here and here. And now I'm not too sure. If you wanted to do some kind of option play from the long side, maybe you buy the 220s and you sell the 235s and do some kind of call spread. And if you're looking for something from the negative side, figure it out.
Well, in some other names that look good, you gotta talk Green Mountain Coffee soaring after hours after news that Coca-Cola will buy a 10% stake in the company.
Yes, just I hate to use same terms with lotto, okay, but they say you have to be in it to win it.
Oh,
that's the beauty. That's the beauty of the stock market, and the beauty of our business is that you can have situations like this if every now and then. And if you're an investor and you were a believer in this company, you're getting handsomely paid today. You're up huge. So with that being said, you look at GMCR. Do I think you could buy it now? I don't think so. This is the all-time high of 115. It's going to gap up big as long as it stays above this. Maybe there's an extra trade there, but I would let it, have a big gap and hold it before you do any, new trades. Some people might try and fade it, into the up move. But for me, I just think that it's just such a nice thing to see where you have, just a company get rewarded and it's been young. I know there's a lot of shorts there. It just goes to show you that you can't just short a company based on valuation. A lot of it has to do with supply and demand as well.
I should have known. I keep them in business.
Me too.
I know, me and my Keurig. How about CRM, which has been showing a lot of relative strength lately? Will this one be on your watch list today if the market continues to hold?
Yeah, this one's tight. It seems like it's in the right sector. So if you look at the chart, I know it is extended and the market's having a hard time with momentum, but above the 61, 63, it can continue.
And how about Baker Hughes?
I'm not that familiar with this sector, but if you look at the actual chart, you'll see it's very tight. And if we do have some kind of push today, maybe it can continue. So if it starts to get above 57.15, perhaps something could show some type of positive movement.
All right, so there is a lot of individual stock action going on, and we have jobs report tomorrow. What are you going to be focusing on?
I'm remaining tactical. I think yesterday, listening to the fearmongers come out after the corrective process already, put short in the brain, but yesterday the trade was to the long side. Today, I think it could be a little wishy-washy because who's going to make some big bets before the jobs number. I think the consensus right now is 187 or something like that. I think if it's in line, we probably get some kind of relief rally, and that could test the 1770, the intermediate trend line. If it's sub 100,000 again, I'm sure we'll be playing with that 1738 area tomorrow and see if there's enough weakness to break below it to head to the 200-day. At this point, take trades, keep moving. If you're a macro investor, stay the course. If you're trading for cash flow, it hasn't been easy. There's been spots for adjustments, which we've spoken about many times. There's been places for relative strength and weakness. So continue to look around. Don't be frustrated, and just know we're in the first week of February. We have a lot of year left, and corrective processes do create better areas to get involved, sink your teeth in for something that could be more sustained.
Well said, Scott. Happy trading, everybody. Have a great day.